Bismillahirrahmanirrahim. Assalamu alaikum everyone. My name is Yasir Yamin and I welcome you all in this session. So guys, in today's session, we'll be doing the mock examination which has been published by ACCA for pre-December 2025 examination attempt for SBR. We'll be doing question number 1. I was just mentioning to the other person, a while ago that the most critical problem students have been facing for the previous attempts is that SBR's paper is very lengthy. So people tend to take a lot of time in, drafting their answers, developing their answers. And, once the time is short, you tend to skip things. It is quite a good possibility that you actually know what has to be written clearly into the scenario, especially for section B questions. But since you're short of time, you just start skipping your content, you just start skipping your knowledge and try to finish the paper ASAP. You lose a lot of marks. So it's very important for each and every student to make sure that you optimize your time, you allocate your time properly, and then attempt questions. All right. So we'll be attempting question number 1 of pre-December 2025 attempt now. Now, for the explanation parts that are there in the question, I would try to, notify the points to you that we identify in a particular exhibit. I won't be writing full answers just to make sure that the class, the class timings remain optimized. Then I would be expecting you to complete the whole question just like it is supposed to be, for the purpose of your mock. And then maybe I can review it for you, or maybe you can review it yourself, but assess where do you actually start. Again, time management would be very important. So now this is question number 1 of your exam, and I am going to attempt this question just like you would be doing so in your examination. So I'm a bit anxious. Likewise, you would be too. Now let's see how, if I were to go into an examination, what approach would I be following? So the first thing that I would be doing is I would read the intro that has been given here. Maybe skip a bit, but still I would skim it through. So it says Waitangi Company is the parent company of a manufacturing group whose financial year end is 30th September 20x6. Now I need to take this into my mind that 30th September 20x6 is the year end, which means that 1st October x5 would be the year start. Now date should be very clear in your mind. Examiner says on 1st October 20x5, which should be start of the year, examiner says Waitangi Company acquired 80% of Zakira's equity shares, Z equity shares, 60% of J's equity shares, and then examiner says 90% of Hassan's equity shares. So on 1st October 20x5, which is the start of the year, you have acquired controlling stake in 3 companies. And thereon, examiner mentions that there are, some exhibits which you need to go through in order to answer this question. Examiner says the following exhibits are available on left-hand side of the screen, provide relevant information to the question. The first exhibit is going to be about fair value adjustments on acquisition of Zakira. Now, you might know that fair value adjustments are made at the acquisition date, and the corresponding impact always goes into goodwill. Just remember that. Then your examiner says there will be some discussion on goodwill calculation and the impairment review of Jenny. So this is a separate company that we are talking about. Now, examiner also mentions that classifications required by IFRS 18 presentation and disclosure in financial statements will be in discussion in exhibit number 3. Now, you can clearly see, I have seen in the previous attempts that your examiner, the actual exam does not replicate the mock exam. Please bear in mind, the actual exam that you are going to see for your upcoming attempt may not necessarily be the same as your mock exam. But I have seen instances in the past that if any core topical area has been examined in mock, that might be followed in the actual exam as well. For example, I see that IFRS 18 has been in focus in this particular mock. Now, there is a good chance that your examiner does actually test IFRS 18. So the P&L structure, the changes you need to remember. Then there is a gain reported in other comprehensive income on the sale of shares in Hassan. So a disposal of shares has been made, and there will be some discussion around it. And then in the exhibit number 5, there is a draft consolidated statement of comprehensive income for the year ended 30th September 2006. And definitely this draft statement of comprehensive income you would need to adjust. If you just have a glimpse at the group statement of comprehensive income, you can clearly see it starts from revenue, goes on till operating profit. So definitely IFRS 18 format has been followed. Then there is some income from associate, which is like investing category. Then profit before financing and income taxes, financing cost, and there are profit from before income taxes, income tax, profit, everything. Then there is other comprehensive income, clearly labeled that there is a separate subheading of items that will not be reclassified to P&L and items that may be reclassified to P&L. So there are some items in other comprehensive income. Then you get total comprehensive income of 25250, and the profits and the total comprehensive income has been allocated to owners of parent company and NCI accordingly, as it should be done. But clearly, the statement of comprehensive income that has been given to you is a draft statement of comprehensive income. That means there might be some changes required, which we will be discussing in the exhibits. So if I were you, I would look at the opening scenario, have a brief glimpse on what financials has been given just to make up my mind, and then I would go on to see the requirement. Now, if you look at the structure of the requirements, the question is of 30 marks for sure. The first question is always of 30 marks. You can see it from here. And then there are 5 requirements. In my personal humble opinion, the more requirements you have, the easier question it will be, because the mark allocation will be split up into smaller portions, which is a good sign. I mean, you write short answers and get easy marks, which is a good thing for you. So you should not be worried in your examination if you see many of the requirements. For example, if you go into your exam and you see that A, B, C, D, E, F, G, H, this is a very good sign. If there are 2 requirements, this may be difficult. Yeah. So you see, requirement number A is of 4 marks only. An examiner says that using exhibit number 1, you need to explain something. Then again for 4 marks, examiner says using exhibit number 2, you need to calculate goodwill arising on acquisition and then later on explain something. Then again for 4 marks. So the 12 marks are from the first 3 requirements. Using exhibit number 3, you need to explain how the foreign exchange differences are to be treated. And there is something on IFRS 18 as well. So again, explanation requirement. For 7 marks here, your examiner wants you to use exhibit number 4 and explain how Waitangi company should account for the sale of 10% interest sold in Hassan. So there has been a disposal and you need to talk about this 10% disposal. And then for 11 marks, now these are very good marks, 11 marks, you need to adjust the pre-populated spreadsheet response option to prepare Waitangi Company's revised statement of comprehensive income for the year ended 30th September 2006. Now, it should be fairly understood by you at this point in time that whatever you do in the above 4 exhibits, exhibit A till D, the impact of these adjustments will ultimately go into the Waitangi Company's group statement of comprehensive income. Yeah. So while reading the above exhibits, we need to make sure that we start adjusting our pre-populated sheet response and gain those 11 marks simultaneously. All right. Now, as we discussed, we are going to start with, then if I were you in an examination, I would go on to the first requirement only and focus on it for the time being. Examiner says for 4 marks, using exhibit number 1, explain how the fair value adjustments affects the measurements of Zakaria's goodwill at acquisition and Waitangi Company's consolidated statement of comprehensive income for the year ended 30th September 2006. So you actually need to explain the impact that fair value adjustments would have on goodwill at acquisition and the post-acquisition period where the P&L would be prepared, just for 4 marks. Now, without wasting any time, I will be opening this exhibit number 1 in front of me. And if I were you, what I would like to do is I would try to open the word processor as well. Yeah, just to save time, if I see something relevant, I will start writing that on the word processor. Yeah, just try to shorten it up, and maybe you can write answer. Yeah, and this is exhibit 1, and this is part number A, right? All right. So here goes the question. Examiner says on 1st October 20x5, now this is the acquisition date, which is start of the year. When Waitangi company acquired control of Zakira, the net assets of Zakira had a carrying amount of $5 million and a fair value of $6 million. So the net assets of Zakira, which is the subsidiary company, were 5 million and the fair value of these assets were 6 million. Examiner goes on to say that the difference between the carrying amount and the fair value related to property, plant and equipment that had a useful life of 4 years from 1st October 20x5. Examiner says the fair value adjustments have not yet been accounted for. Can you help me understand what is the scenario here? Clearly, it's an upward fair value adjustment. And I want to ask you two things only. What will be the impact on goodwill at the date of acquisition, and what will be the post impact in your P&L? So two things only. So what will be the impact of upward fair value adjustment on goodwill? When you account for the upward fair value adjustments, your goodwill will tend to decrease. And what will be the post-acquisition impact? Now, since these are depreciable assets that you're talking about, and the remaining useful life of these assets are 4 years, excess depreciation will be created. And whatever excess depreciation comes will be written off in the P&L as well. Your examiner says depreciation has been correctly classified as an operating expense. So whatever depreciation comes will be part of your operating expense, and that you will be adjusting in your pre-populated spreadsheet just here. All right. So this is how you are going to go about it. Understood? Right? Okay. Examiner also says Zakira's goodwill has been impairment tested and no impairment loss has arisen, which is a good sign. So is there any impact of identifying no impairment on goodwill at the date of acquisition? No. Is there any post-acquisition impact on your P&L of no impairment? No. Just say that there is no impact. So I'm not going to write the whole answer, but maybe make up some points for you so that you can later on, prepare some valid paragraphic points. And I would like to reiterate, I've been reading some answers of students, in this period. Some students feel that since in such classes, I summarize my answers in the form of bullet points, it is okay for you guys as well to write answers in bullet points. I can assure you that if you write answers in bullet forms, it is all right. It is no problem at all. No problem at all. You can surely write answers in bullet form, but just make sure that you also opt in for the next attempt as well. Because this attempt you are not going to pass. I hope I make myself clear. So I have the privilege of writing like this because I am not attempting the real exam, but you are. So please be, please be mindful of that, that when someone asks you to explain, you don't answer in bullet forms, you answer in a para, right? So what are the relevant points here? That maybe I'll start with the two most famous words that I always use according to IFRS 3. Yeah. A business combination has to be accounted for using the acquisition method, which requires to value the acquired company on fair values as per the acquisition date. The upward fair value adjustment And how much fair value adjustment would there be? The carrying amount was 5 million and the fair value was 6 million. So $1 million worth of fair value adjustment, right? If you clearly look at the question, if you look at your P&L, your P&L is provided in thousands. So whatever I write, I will be writing in thousands. All right. So the upward fair value adjustment is $1 million. Yeah. Which you can say is calculated as $5 million minus $4 million. This will have an increasing effect on the property, plant, and equipment, but will reduce the goodwill calculated at acquisition. Right? This is a relevant point. What should be another point? The excess depreciation. Furthermore, since the fair value adjustment in consolidated books is an upward adjustment, therefore excess depreciation on it will also be recognized in the post-acquisition period. Waitangi Company classifies depreciation as an operating expense. Therefore, further depreciation. How much is the further depreciation? 1,000 divided by how many years was it? 4. Yeah. So 1,000 divided by 4 years. Further depreciation of $250 will be recognized. This depreciation expense. Now you need to be mindful of this. Whatever affects your P&L will also eventually affect the attribution as well. Do you get my point? Whatever the group profit comes, please be mindful of this. Whatever the group profit comes, it is always distributed between owners of parent company and NCI. So if you make some adjustment to the profit, you also need to make an adjustment to the attribution. Yeah. This depreciation expense will be apportioned between profits attributable to parent company. How much was the holding? So 80% of Zakira's was acquired. So will be attributable to parent company 80% and non-controlling interest, which is 20%. Now, is it okay with everyone? Is it okay with everyone? Clear? One more thing that I remember from this paragraph was that examiner also talked about that there was no impairment in this case. So I would like to mention this point as well. Waitangi has tested for impairment, and since there is no impairment loss assessed, therefore no impact on P&L for the year. In any case, it would have had no impact on the goodwill calculated at the date of acquisition. So examiner always asks you to highlight answers relating to 2 points. What will be the impact on goodwill at acquisition and what will be the impact on P&L? So both sides you need to answer. Yeah. So if I were you, I would rightfully so also adjust my spreadsheet as well. So here I go. I hope this spreadsheet is visible to all of you. Please let me know if it is. Can you clearly see this? Yeah. Good enough. So I would like to write here excess depreciation. Yeah. And this excess depreciation will go into operating costs. So 250 minus. Okay. And remember, the impact of this 250 will also be to the profits that are attributable to owners of parent company and NCI. So 80% of this 250 shall be attributable to parent company. And likewise, the remaining 50 should be attributable to NCI. And also remember, guys, I know you guys are smart enough. Whatever you adjust in profit will also be adjusted in your total comprehensive income attribution. You know, total comprehensive income includes profit as well as OCI. Total comprehensive income includes everything. So if there is a change in profit, obviously there will be a change in total comprehensive income as well. So I'm writing down the same numbers with total comprehensive income as well. Is this clear to everybody? I want a quick answer since we don't have too much time. Let me know. You see, in a real exam, you would be short of time as well. So I want a clear answer and quick answer. Make sense? So we are done with exhibit number 1 right away. I'll just close it for a while, go on to exhibit number 2, but the word processor still needs to be there. I'll just read the requirement first for another 4 marks. Examiner says, using exhibit 2, calculate the goodwill arising on the acquisition of Jenny and the impairment loss following its impairment review. Explain how this impairment loss should be accounted for in Waitangi Company's consolidated financial statements. So they are talking about the goodwill. You need to calculate the goodwill and then you need to talk about the impairment. Yeah, you need to explain how the impairment loss is to be accounted for. So we'll consider both things. Now let me just adjust the exhibit. Let me know if it's clearly visible to you. Is it clear? So examiner says Waitangi Company acquired 60% of Jenny's 1 million equity shares on 1st October 20x5, which is the start of the year. Good point. Yeah. Paying consideration of $10 million when the fair value of net assets was 8 million. So you paid $10 million in order to acquire 60% of these 1 million equity shares. So you acquired 600,000 shares for a price of $10 million when the fair value of net assets was 8 million. Jenny's share price on 1st October 20x5 was 4 and the non-controlling interest is to be measured at fair value. So I remember that for exhibit number 2, one of the things that examiner required me to do was to calculate goodwill, right? So let me just go around it. B part, and this can be exhibit number 2. So I can talk about the calculation of goodwill. I can just calculate it here. Your examiner wants to value the non-controlling interest on fair value basis. That means that your examiner wants you to go towards full goodwill method. And how will you be calculating full goodwill methods goodwill? You will start with your consideration which has been paid by parent company. And I can also prepare a table here. So let me just prepare a table here. I think it can be easier for you to assess. So I'll start with consideration paid by parent company. And the consideration paid by parent company is like how much? 10 million? Huh? Then there is fair value of NCI at the date of acquisition. Can anybody help me calculate this fair value of NCI at the date of acquisition? Examiner has clearly given Jenny S company's share price of 4. And if you multiply this 4 with 1 million and 40% NCI holding, it is very easily calculatable. So $4 per share is the price. You multiply that with 1 million shares. Yeah. And I'll just write this 10 million into thousands because I remember the P&L was in thousands. So 1 million and multiply it by 40%. So what is the value of NCI? 1.6 million or 1600? Yeah. And then you write fair value of net assets of S company at acquisition. So this was like fair value of net assets was like $8 million. Examiner clearly wrote about it. So minus 8,000. And thereon you will get your goodwill at acquisition with the value of 3,600. Make sense? Now, is it clear to everybody? I don't think this is any difficult. Make sense? All right. Now, examiner wanted you to also talk about impairment review. Yeah. So examiner goes on to say in the exhibit, Jenny is assessed as a cash generating unit and at the reporting date means the year end, has net assets of 10 million and a recoverable amount of 11.6 million. So Jenny is assessed as a cash generating unit and the recoverable amount is 11.6. Now you need to calculate the impact of impairment. So can we guys calculate impairment here? How do you perform your impairment review? Impairment is said to arise when your carrying value exceeds your recoverable amount. Remember? Make sense? So clearly, your carrying value of net assets is to be taken. Then you compare it with your recoverable amount and then see if there is any impairment. Make sense? So what is the carrying value of your net assets of S company? What is the carrying value of net assets of S company? Jenny has reported in its financial statements, that means in its individual financial statements, Jenny has reported that it has net assets of 10 million or 10,000, right? 10K. Plus you need to include the goodwill that was just calculated. You need to include the goodwill that was just calculated. Since you are testing for impairment from a group point of view, you need group net assets. And since you need group net assets, you will also be considering the full goodwill. Make sense? So the carrying value of net assets that you have is 13,600. And please remember, to everybody I'm saying, there is no concept applicability of grossing up here. Can anybody tell me why am I not grossing up the goodwill? Why am I not grossing up the goodwill? Why? Because it is already full goodwill, right? So the recoverable amount is like 11,600 and that means that there will be an impairment of 2,000. Make sense? Now you need to tell your examiner how this impairment should be accounted for. And I'm just writing out a certain pointer for you to remember. An impairment review concluded that there is an impairment loss of 2,000 at the reporting date. This loss will affect the consolidated profit or loss, consolidated P&L, or I can say, and should be classified under the operating category. Always remember, after the advent of IFRS 18, whenever you are writing something should go in P&L, you should specify which sort of category, either operating, investing, or financing, which category would the income or expense be recorded into. You will get a mark for it. All right. Should be classified under the operating category. This impairment loss will be apportioned between parent company, and you should be writing parent company the whole. I'm writing P company and NCI both. This is because company follows full goodwill method. Now, since goodwill belongs to both parties, therefore the impairment is also to be charged to both parties. Hence, but I think this is more than enough. Yeah. So you'll have to explain for 4 marks. So maybe 2 marks for calculation and 2 marks for explanation. This is how you go about it. All right. So I will also adjust this in my spreadsheet as well. It's better to adjust right here, right now. So guys, there is an impairment for Jenny. This impairment should be recognized in your operating costs. So minus 2,000 here. Yeah. And since you're booking something here, it will also affect the attribution of profit, which is done to parent company and NCI. How much holding did we have in Jenny? Does anybody remember? I guess it was 60%, right? 60%. Exactly. So I did a mistake. minus 1200 it is, and that means that minus 2000 minus 1200 is 800, and the same will affect your total comprehensive income as well. Make sense? Is it clear to everybody? Clear? Just give me a thumbs up or a yes right away, because again we need to hurry up. Just 8 marks we are done up till now. Okay, let's move on. I'll close down this exhibit as well. Then I'll see the requirement using exhibit number 3, and again this is for 4 marks. Using exhibit number 3, explain how the foreign exchange differences should be classified in Waitangi Company's consolidated statement of comprehensive income for the year ended blah 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 in accordance with IFRS 18 blah 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 for 4 marks. Okay, so I need to explain how the foreign exchange differences should be classified. The question is how the foreign exchange differences should be accounted for? No. Or how should they be calculated? No. How they should be classified in your P&L? So the question is regarding classification, and especially within the context of IFRS 18. So the only relevant thing under IFRS 18 as far as the classification is concerned, that you need to classify your incomes and expenses into operating, investing or financing category. So your mind should only think about that, nothing more. Okay. So let's go and see. Let me know if the exhibit is visible to you all. Is it clearly visible? And maybe I can write here, see exhibit number 3. Yeah. So what does it say? It says Waitangi Company has certain foreign exchange differences, and these all have been correctly calculated at a net loss of 180,000. The first things first, this has been correctly calculated, so you don't need to worry about the accuracy here. And the net loss is 180,000. Examiner says, however, the directors have not applied the requirements of IFRS 18 and have classified all exchange differences as operating expenses. So basically, your examiner is saying that a net loss of 180,000, a net loss of 180,000 has been classified under exchange differences, under operating expenses. And your examiner says that it is incorrect. So you need to correct it. Something which has been posted under operating expenses as a loss needs to be reversed. Make sense? Is it clear to everybody? Examiner goes on to say, examiner says the foreign exchange differences comprises a 200,000 loss relating to overseas loans incurred by Waitangi Company. So there was $180,000 net loss. Included in this loss is a 200,000 loss which is related to loans. So there is an exchange difference on loans. A loan is a financial liability, a monetary item. It should be marked to marketed. Yeah, it should be retranslated. And there is an exchange loss on loans. Can you tell me where this exchange loss on loans should have been recognized? Under operating category as an operating expense, like it has been done right now, or should it have been classified under investing category or financing category? What is your thought about this? I mean, sir, common sense. It should have been classified under the financing category, rightfully so. So I can clearly say that with the advent of IFRS 18, income or expenses shall be classified in either operating, investing, or financing category. Operating category is the residual category, which means that if any income or expense is not attributable to either financing or investing category, then we classify that in the operating category. It seems that directors has not applied this approach of residual category, and rather directly recognized the net loss in operating expenses, which is incorrect, right? Dollar 200,000, 200K pertaining to loss on overseas loans is a financing. And I would also like to highlight one more point here. This is for your, again, you need to remember this. Under IFRS 18, income or expenses are classified in either of the categories, based on the nature of their respective asset or liability. Yeah, that is the nature of the transaction itself. This you need to clarify to your examiner. You should be knowing this as well. 200,000 pertains, I would write, hence the $200,000 exchange loss pertains to financing the company through loans, and therefore any corresponding income or expense shall also be classified under the financing category. Make sense? Make sense? All right. This will have eventually no additional impact. I'm writing this line and you need to confirm if you understand this or not. This will eventually have no additional impact on profits or total comprehensive income attribution, since it was already recognized in the P&L. Just classification is being changed. Do you understand this point? You see that there is a 200,000 exchange loss which was incorrectly classified as an operating expense. Now it needs to go into the financing category. I'll do that in front of you. So exchange loss on financing, right? So there was some exchange loss on financing. A loss of 200,000 was parked under operating expenses. I'll be adding it back. So 200 positive. This will be going rather with the financing category. You can write minus 200 here. But the net impact on the P&L is 0. 200 minus from one category, 200 positive in another category. So the net impact is 0. Since there is no additional impact on profitability, there will be no change in profit attribution here or total comprehensive income attribution here. Is it clear to everybody? I want an answer from everybody so that I can move forward. Yeah? Good enough? But there is something more remaining. Examiner says, and a 20,000 gain on the retranslation of 100% overseas subsidiary. So 20,000 gain was there, which was included as part of your operating expenses, but it was a gain that should have been recognized under OCI. That should have been recognized under OCI. Can you help me with this? There is a retranslation gain. Remember IAS 21? Whenever you retranslate a subsidiary, remember we used to learn those rules. Transaction, the acquisition date transaction will be recognized on acquisition date rate. The balance sheet date transactions will be recognized on balance sheet date rate. P&L transactions will be recognized on average rate. Whatever exchange gain or loss comes will be recognized in OCI and accumulated under translation reserve in equity. Remember everything? Do you remember? Yes or no? Yeah. And if there was a gain on full goodwill method, it was to be shared between both parties, otherwise not. So this 20,000 gain should have been recognized as part of OCI. but they have recognized this as part of operating expenses, which is wrong. So I will go here, exchange gain on subsidiary translation. I will be increasing my expenses by 20. Yeah, because the gain was included. I'm removing that. I'm subtracting the gain minus 20. And I would rather write this gain, exchange differences on translating foreign operations here. A separate category has also been given by your examiner. I will touch it down a positive here. Is it clear to everybody here? Okay. So I'm transferring something from P&L to OCI. And remember, since you are transferring something, since there is a negative impact on your P&L, you're transferring a gain from P&L to OCI. Remember, there will also be an impact in the owner's equity of parent. There will also be an impact on owner's equity of parent and NCI. Yeah. So what you should be doing is 20. How much was the whole? Oh, sorry. It relates to parent company. It relates to parent company. Your examiner told us about the subsidiaries holding? No, the holding has not been given. I will assume. Okay, so this is a 100% overseas subsidiary, pretty much clearly mentioned. So every impact goes into owners of parent company. It is clearly mentioned here. This is a retranslation on a 100% overseas subsidiary. Yeah, here it is written. So I will take the entire impact into owners of parent company. But you see, there is a negative impact on your P&L. I'm masking this negative impact in the profit attribution in the row of owners of parent as well. But I will not be making any change in the total comprehensive income attributable here. Can you tell me why is that? I will not be making any change to the total comprehensive income attributable. Why? There is a question, sir. Why is it a 20,000 negative attribution to parent? Because, my dear, I am excluding a gain. I am removing a gain. If I'm removing a gain, it will be a loss now. It will be a loss. If I'm removing a gain from my operating expenses should increase. And likewise, it will be a loss as far as the profit attribution is concerned, right? But what I'm saying, the question is, I'm not making any changes here to the total comprehensive income. Why? Quickly tell me. Why am I not going to make any change in the total comprehensive income? No, Maria, this is not the reason. No, my dear fellows, please try to understand. I shifted an impact of gain from P&L to OCI. I shifted an impact of gain from P&L to OCI. But the total comprehensive income includes the impact of P&L and OCI both. So from a total comprehensive income perspective, it does not matter if you transfer something from P&L to OCI. At the end of the day, it is included in the total comprehensive income. Make sense? So since it is already included in the total comprehensive income, and below the attribution of total comprehensive income has been done, it already has been accommodated. But since this $20 removal of gain would clearly impact the profit, now profit is a singular item. Total comprehensive income includes everything, other comprehensive income and profit both. But the profit itself is a singular item. Since it is going to be an impact on profitability, I had to make some changes in the profit attribution. Make sense? Is it clear to everybody? We need to move ahead. Please confirm. Is it clear? Good enough. I got decent bit of answers, and that is good enough for me. All right. So I would like to move on to the next exhibit, but I will first read the requirement first. This is for 7 marks, guys. A lot of marks around here. Examiner says, using exhibit number 4, explain how Waitangi company should account for the sale of 10% interest in Hassan in its consolidated financial statements. Okay. So a 10% disposal has been made. But just to point out, we acquired 90% of Hassan's equity shares. And then a 10% disposal has been made, which means this is dash. What is the dash? This is a disposal. Thank you, Rashid, for telling me that. I did not know that. This is a dash type of disposal. Yes, this is a subsidiary to subsidiary scenario. There is no loss of control. And you remember what IFRS used to say? If there is no loss of control, this is a transaction which is to be treated between equity participants. So a pro rata change we use to account for it. Yeah. Let's open exhibit number 4. Let me know if it's visible to all of you. Is it clearly visible? Yeah. So examiner says Waitangi company had purchased 90% controlling interest in Hassan for $90 million. On consolidation of the subsidiary, non-controlling interest was measured at fair value. So the full goodwill method was initially used. Okay. And the non-controlling interest was measured on fair value. Examiner says during the accounting period, Waitangi company sold 10% of the equity of Hassan for $25 million. So first thing's important, you have sold 10% of the holding for a cash proceed of $25 million. We need to write about it first. Yeah. Let me just make up some points here so that I don't forget. In this case, when Waitangi company acquired 90% holding, it would have given it control over the other entity, and therefore Hassan would be termed as a subsidiary, while remaining 10% would be for NCI. During the accounting period, during the accounting period, a 10% disposal has been made, but no control would have been lost. So from an accounting point of view, there is no significant change in ownership style. Therefore, as per IFRS 3, this should be accounted for as a transaction between equity participants, and any gain or loss should be accounted for in equity accordingly. Make sense? Is it clear to everybody? Yeah. What you should be doing, you should be calculating the value of NCI and then prorating it. Remember S to S? Examiner says a gain of $15 million being the difference between the sale proceeds and the cost of shares sold has been recognized in group equity and reported in group's other comprehensive income. If you go on to see the other comprehensive income, here you can see that a gain on sale of shares has been recognized as part of your OCI. Now, my question is this approach correct? You do not recognize, please remember, you do not recognize any gain or loss in such a case. You do not recognize any gain or loss in such a case. Any adjustment to equity, because again, non-controlling interest would be increasing and controlling stake would be decreasing. Any adjustment is not called a gain or loss. Rather, it is an adjustment to equity. It is an adjustment to equity balances. Okay. So let me clearly say that from a group point of view, no gain on disposal should have been recognized, and therefore $15,000 gain, 15 million or 15,000 gain, I can write million in text at the very least, gain must be reversed from OCI. Whatever is the impact from increasing the non-controlling stake and decreasing the controlling stake is an adjustment to equity slash other components of. Is it clear to everybody? This should have been followed. And what should be done? What should be the adjustment? Examiner says at the date of sale, the net assets of Hassan were 170 million, non-controlling interest was 13.5 million, and the goodwill would be $10 million. Can anybody help me to calculate the adjustment that needs to be made to NCI? Adjustment to be made in NCI. For that, I will need the NCI as on the disposal date. Can anybody help me calculate NCI as on the disposal date? What should be your NCI on disposal date? You see, examiner told you that on consolidation of the subsidiary, non-controlling interest was measured at fair value. So you can clearly see that goodwill would have been calculated on full goodwill basis, right? So what you need to do, how can you calculate the value of NCI as on the disposal date? You see, the net assets of Hassan at the date of sale were 170 million. Yeah. Plus you also need to give this 10 million share to NCI since it would have been full goodwill method. So 170 plus 10 is equals to 180. And you multiply this 180, by how much percent? By how much percent? We had 90% controlling stake. Their NCI would have been 10%. Can you tell me the value of this? 180 into 10 would be $18 million. Yeah. But this $18 million only represented 10% of the equity. What you need to do next is you need to do pro rata of NCI. How will you do that? $18 million divided by 10 multiplied by 20, and that should give you the double of this, $36 million. Make sense? Make sense? This is a pro rata. So now you have got the value of 36 million, which represents 20% NCI against 10% NCI previously. And hence this means that the accounting entry should be, can anybody tell me the accounting entry for this? You see, you disposed of some controlling stake in the business. You received some proceeds. So cash would have been debited. How much cash was received? How much cash was received? 25 million or 25,000. So cash debit 25 million. NCI increased as a result. NCI increased as a result. So NCI would increase from 18 to 36, an increase of 18 million again. And therefore, there will be a corresponding credit adjustment to your equity. I can write OCE credit, and the value would be 25 minus 18 is 7 million. Is this clear? Now, this adjustment will directly be made to equity or other components of equity. Is it clear to you guys? Sir, why we multiply by 20 as we own 100%, then 10% disposed? No, my dear. First of all, we only owned 90% in this particular company. It was the previous exhibit. We had the entire stake, first of all. So in Hassan, we only had 90%, and that means 10% was NCI. Now the NCI is increasing. We sold 10%. That means the controlling stake would be 80%. Make sense? So when the controlling stake is 80%, the NCI would have been 20%. So we pro rata it. Yeah. Is it clear? Is it clear to everybody? Any questions? Come on, hurry up. So there is a gain of $7 million, or rather, Maria, we call this as an adjustment to equity because the controlling stake is coming down, but it is coming down with the proceeds of 25 million. So it is an adjustment to equity, you would say, or rather a gain of 7 million. You can call it like that. Make sense? Is it clear to everybody? Come on, hurry up. We don't have time. Yeah. So guys, I don't know. Is this the last adjustment that we had to make? Yeah. So this was disposal gain. So this disposal gain, examiner had included this disposal gain in OCI. So this needs to be subtracted. Now the gain has been reversed. And likewise, the gain should also have been taken to it should also be adjusted in total comprehensive income. Yeah, because if something is part of OCI, then it should also have been part of the total comprehensive income. Is it clear? Is it clear? Is it okay? Done? So what are we left with? I believe we have done exhibit number 4 as well, 7 marks, and now it is time to adjust the pre-populated sheet that we have already done. But let's determine the correct P&L or the final, because the previous one was a draft one. So let's go about it. The revenue, I'm just going to sum it all up. The revenue stays as it is. The cost of sales and gross profit stays as it is. Yeah. And then there is some adjustment to your operating cost. Your operating profit now will be 11930. There is no adjustment in the investing category. So now your profit before financing and income taxes come as 12,330. Then there is, by the way, you can copy paste the formula that you used before. So you see in this particular cell, the sum formula has been used. So if I copy this cell and paste it below, it will automatically apply the formula that had been applied in the earlier cell. So I'm using this manner. Okay. It can be easier for you. So this is 11,630 of profit before incomes and tax. And thereon you have 7,730 as your revised profit. Okay. Then you have, Maria has a question. I'll ask, won't we post the correct values of NCI in spreadsheet for 10% disposal of Hassan? Just removing, or am I? Okay. Maria's actual question is, sir, when you removed this 15,000 gain on the sale of shares, you only removed the impact from total comprehensive income in the owners of parent category, but no adjustment of this gain was made in NCI. Why? This is the question, if I understand it correctly. Can anybody answer on my behalf? I mean, what's the reason why am I not making any adjustment to NCI for the disposal that parent company made? Can anybody answer? No, 18 million increase in NCI is an as at adjustment. It is an as at adjustment at the date of disposal. It's not a for the year adjustment. This is for the year NCI. This is for the year NCI. And 18 million increase in NCI is not for the year adjustment. It is a as at adjustment at the date of disposal. Maria, is it clear now? Yeah, understood. So no adjustment has to be made under NCI, and likely so. I mean, it might come into your mind, sir, how can I make the whole NCI figure is 1,000 here, and I've already made some adjustment. How will I make an adjustment of 15,000 or something 18 million? It is just impossible. Yeah. So if I were you in an exam, even if I did not remember the concept, I would still not allocate anything here. Yeah. So following on, there is no gain on sale of shares now. Revaluation gain on PPE comes as is. Exchange difference on foreign operations now is 20. I will be summing up the OCIs first, like your examiner has done, 270. The total comprehensive income will now be the amalgamation or accumulation of profit and other comprehensive income, which is 8,000 now. You use the same formula here and here. The total profit attribution is 7730. You can clearly see that your profit and your profit attribution matches, which is a good sign for you. Yeah. Then you do this, and you sum it all up. And your total comprehensive income here and the total comprehensive income attribution also matches, which is a good sign again. So I believe the question is done. Is it clear to everybody? Is it clear? You know, how much time did I take to solve this whole question while answering your queries and also trying to explain you some of the things? I took around an hour. I certainly think that if such type of a question comes into your exam, you should be taking a lot less time. Now, this is only possible if you apply the correct approach. If you do not apply the correct approach, I mean, if you do not keep on adjusting your consolidated P&L, or if you are not well versed with the topics, I believe you can take 2 hours in just simple adjustments. You know, last time I remember from my last attempts, one student told me, sir, I took Alhamdulillah, I did consolidation very well. This was the first message. And I was so proud of that person. And then the other message was, sir, I took 2 hours in that. And, you know, the level of anger that I had, or, I was cursing my own self. I mean, why would a student take 2 hours in consolidation? It does not make any sense. Now, Marim, you just said that, sir, it's easy for you. It's easy for me because I practice. It can be easy for you as well if you practice. So you need to allocate sufficient amount of time into your studies, just making sure that you prepare yourself very well. Now, every now and then, Mariam, I can tell you, everybody messages me with a lot of useless stuff every day. Sir, what if I close my eyes and try to study? Would it be a good approach? Sir, what if I do some magic on current issues? Sir, what if I dance like this? All the stupid questions that can come, in these days always come. And it's quite usual. I get used to it. I've got used to it. But believe me, the amount of time that you spend just thinking on what can go wrong, if you spend the same amount of time thinking or practicing or making sure that you are well prepared for your exam, and just for the sake of it, just start envisioning that, yes, I will be successful. I always talk to my students. You always think something will go bad in your exam, and it might go bad in your exam. That's the reality. But while you are already trying, you see a student is saying, sir, I'm already losing it. You're just afraid of something which is not under your control. When I was a student, rather than thinking, and I think that was the correct approach. Now I literally think that was the correct approach. While I was thinking that, something might go wrong, I, rather than doing this, I always used to think, what if I pass? If I get those 50 marks, wow, I will be one step closer to qualification. And then I will qualify one day. I will have a job, a very good job, a job that pays for my international trips, that pays, hundreds and thousands of pounds to me for a minute. And then I will fly in the helicopter every day. Elon Musk will come and meet me. I will get a Dubai ticket if I score above 90. You need to think about the positives. I mean, everything could go bad. Totally agreed. But what if it goes well? I mean, you just need those 50 marks. Believe me, you just need those 50 marks to get it done. 50% of the things, if you do it right, you will get there. But if you're not planning yourself, if you're not, how many students do we have? Only 20% of the total enrollments actually come into the live class. Only 20% of the enrollments. We've got a huge batch, alhamdulillah. But only 20% of the enrollments come into the live class. And do you really expect that anything positive they can even envision? No. Everybody, every now and then, somebody asks me, sir, why don't you give us 2000 mocks? Sir, can we do 2000 mocks? And nobody attempts the mock. Nobody. I can just count how many people gave the previous test that I gave you. I guess it was test number 3 or 4. I can count on one hand's fingers. 3 or 4 people, or maybe 5 or 6 people only gave the exam. So the point I'm trying to make is, you can spend a lot of time thinking about bad stuff. Neither I can control that, neither you can control that. Neither I am your examiner, nor you are your examiner. The only thing that you can do is just please, please stop wasting your time. This is the golden period that you have. I can tell you, the sooner you qualify, the better it will be. The less time you take to qualify, the better it will be. The more time, you will have all the perks and rewards afterwards. This is the time to make the effort. I don't care if you don't sleep. I don't care if you spend 20 hours a day studying. I don't care about it. Shah Rukh Khan, and it's okay to quote everyone. You can see on YouTube and everything. Sometimes, people say words of wisdom, and if it's a good thing, you can take it. Shah Rukh Khan said in one of his interview that one of the key formulas for success is that please stop wasting time on things that are not a priority now. So you see, everybody likes to sleep, but stop thinking about sleeping. Sleeping is something for you as a student that comes naturally. When you're too sleepy, you go to sleep. That is it. But you don't plan your sleeps, so to say. If you want to be successful, don't plan your sleeping. Don't plan your eating. Don't spend a lot of time on, planning what to eat. Just eat whatever is available and don't waste your time. You need to work hard. And there are no Sundays, by the way. I was just explaining something. Sorry, I get emotional sometimes and I speak a lot, but still, let me say it. But sometimes you need to make sure that you clear out the ambiguities in your mind. Please. There is no concept of Sundays for you. There is a concept of Sundays for me. There is a concept of weekends for me. There is a concept of, work and life balance for me, but not for you. Not for you. You're a student. Monday to Saturday is your Sunday as well. What do you do in Monday to Saturday? Even if you work, you don't work like a president of a country or something like. So you should not be so proud of yourself this early in your career that you start making mistakes. There should be no concept of Sundays. There should be no days off. There should be no extra time for sleep. And this is a stupid concept that I've been listening to many of the people, especially the younger people. They say, sir, I feel demotivated. What are you talking about? Are you a baby? I feel, my son, and sometime I will show his picture to you, or maybe you can see a video of him or mine. He looks exactly like me. Remove the beard and we are twins of each other. He plays all the day. And by the night, what he says, it was not a good day. I was bored all day. Like, he's very young. Babies talk like this. Yeah, so they utilize all their day and then they are demotivated again. Are you a baby? No, you guys are professionals. Talk serious. Every now and then, sir, I feel demotivated. Are you a kid? Motivate your own self. What type of motivation do you need? You should be a motivation for your own self. The aspirations, the visions, the dream that you should see every day, that should motivate you every day. I always dreamt of becoming a teacher. I always dreamt of seeing myself as a chartered accountant. And wallah, I can assure you, my efforts were this, but Allah Ta'ala helped me to receive whatever I don't deserve. I received more than that. Some people sitting in my classroom and listening to me while the class is already over, that's enough for me. I don't deserve this. I'm not capable enough, but still you are listening to me. You're listening to whatever I'm bragging about. This is more than enough. You see, I always dreamt that people listen to me. I had some words of wisdom to say of my own. Allah Ta'ala gives you what you dream of. So please be mindful of this. You can deactivate your Instagram. I when I qualified in 2 years, I deleted my Facebook or deactivated my Facebook. I did not see any television in those 2 years. I only watched maybe a couple of matches, cricket matches. I used to love cricket. I did not watch any TV in those 2 years. You can ask my parents if they were alive. You could have asked my parents, maybe my sister or my family members. I did not watch TV for even a single movie I watched in those 2 years. But I did that in 2 years. 2 years, 4 papers in each and every attempt. Now, if a person like me who is not God gifted, who is not the smartest person in this room, who is not the best teacher, who is not the best student, who is not the smartest, if I can do it, you guys are 1,000% smarter than me. I am very sure. You guys are much, much, much more capable than what I am. And I can assure you, just a bit of discipline, dedication, hard work. If you work as hard as I do, and still you don't succeed, and still and still you see that nothing's working out, then you can say, sir, my luck is not good. But I have not taken a leave in the past 10 years on Sunday. I've always worked hard. I've maintained my 2 work profiles. I've managed my, everybody does that, not me. Every teacher is doing that. So if I don't take leaves on Sunday, why do you have this concept? Just make sure that you go about it. You should be doing a very good paper. Work hard on Sunday. No extra sleeping time. The paper it is, and inshallah ta'ala, everything will be fine. Yeah. So you waste your time on your phone, maybe throw it off. Or maybe gift it to me if you want. I can give you my address. Any more comments? I think sometimes I emotionally, get carried away. And sometimes I speak false as well. But I hope I did not hurt anybody. But still, I would like you to attempt this mock examination and, draft your answers perfectly, maybe better than what I have done. And inshallah ta'ala, I'll see you guys in the next time. All right. So take care. Bye-bye.